Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account. Right now, the net asset of my account is 73,339.49. Today's loss is 157%, $57. United Natural Gas made a loss of 1.5% to $7.2, and SQQ made a loss of 1.47% to $22.75. The stock market showed a slight rebound overall in the internet industry. As for the big drops in the recent days, Dow Jones Industrial Average continued closing down 1.12% lower due to performance in the medical industry and banking industries. Nasdaq Composite Index closed up 0.38% to 12,643.01, and the S&P 500 closed down 0.48% to 4,117.39. Today, the internet retail industry closed higher to a gain of 4.71%, and the drug manufacturers and the financial industry and biotech have all closed down with a loss of more than 2%. Today, Amazon closed up 6.83% higher with a gain of $8.17 per share. And today we're going to be talking about the gap between the income inequality gap within the U.S. society, and how have it been gradually expanding. American baby boomers have plenty of money, and high interest rates have made their savings account growing. At the same time, young Americans face debt problems, high rent, and mortgage rates that makes it harder to buy homes. This phenomenon has prompted BOA to propose a new trading proposal designed to harness the widening generational gaps between the rich and the poor. Investing in elder-related stocks and avoiding companies that rely on impoverished millennials. In an interview, Oh-Soon Kwon, a quantitative strategist at BOA, said, "Millennials are more affected by the cycle of rising interest rates, while post-war baby boomers are relatively less affected. And the differences have been more obvious that although the U.S. economy has remained surprisingly strong, largely as U.S. Consumer spending has grown steadily since the end of the lockdown. However, at the bottom of the economy, there is an increasing problem, which is the widening of socioeconomic gap. The Fed has aggressively raised interest rates, slowing down certain areas of the economy. However, these measures actually provide a steady economic stimulus for older Americans, increasing their savings account interest rates from almost zero to its highest level in 2 decades. Bank of America says the situation could win in industries like healthcare and entertainment, where older people spend a lot of money. In contrast, clothing retailers, which are dominated by young people, face serious challenges. As the Fed plans to keep interest rates high for some time to come and rise federal deficit, push bond yields higher, this will continue to drive high interest on the government payments that will go up directly to investors' pockets. Baby boomers and their predecessors now occupy the majority of the U.S. consumption, according to Bank of America. At the same time, people born in the early 1980s to the late 1990s became conservative in spending, and the arrears on credit and debt cards increased. Before the outbreak, there was an empirical evidence supporting that post-war baby boomers perform better than millennials in investing, retirement account, and home ownership millennials. And after the outbreak, the gap has become more pronounced because rising interest rates and higher interest rate, rising inflation and higher interest rates, and the separation is huge. Cruise ship has the highest exposure among the post-war baby boomers, which accounted for about 40% of cruise ship travelers. According to Bank of America, for adults over 50, traveling is the highest ranked priority for discrete spending items, according to Bank of America, citing AARP data. And the industry has benefited from post-pandemic travel boom. The hotels, resorts, and cruise companies in the S&P 500 are nearly up 28% this year, remaining high even after some declines in the past few months. While Bank of America report did not provide specific stock recommendations, it specifically noted that American Express is one of the beneficiaries of baby boom theory because older people are more often using companies' credit cards. On the millennial side, Bank of America cited slowing closing spending due to in part of the existence of wealth and consumption gaps between the two age groups. Analysts believe retailer Revolve carries specific risk because the company's products are more likely priced but favored by Gen Z and millennial consumers. However, some investors express doubts about the long-term persistence of such ideals due to the rapid age growth of post-war baby boomers, and all of this wealth will eventually be inherited by millennials and most consumed by them. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.